Welcome to the deep dive. Great to have you with us again. We sift through a pile of sources to pull out what really matters, giving you the key insights fast. Today we're digging into Palantir Technologies, ticker PLTR. We've got some interesting material on their recent market moves, and our goal is to help you quickly understand the main points.
Exactly. Palantir, PLTR, it's definitely a name that gets a lot of attention, lots of activity recently, and we want to cut through that noise for you, help you see the key forces, the good, and maybe the risky.
Okay, let's unpack this then. Sources show some real positive momentum lately. What's been driving that excitement?
Well, the big one was a major new contract, a 5-year deal worth about $100 million with the U.S. government.
Okay.
And it's for developing something called a nuclear operating system.
Wow, nuclear operating system. That sounds pretty critical.
It absolutely is. It's a huge vote of confidence, really. Shows trust in their tech for, incredibly sensitive national security stuff. That pushed the stock way up, actually hit a record $148.22 before settling back a bit.
Right, profit taking maybe. So a big government win. But there was more positive news too, wasn't there? Something about a partnership.
Yes, exactly. They expanded their partnership with Accenture Federal Services. Accenture, huge global player, deeply connected in the federal space.
So Accenture can help Palantir's AI platforms get into more U.S. agencies faster, like a force multiplier.
Precisely. Accenture brings the connections, the implementation teams. It helps Palantir scale across the government much quicker. That news gave the stock another nice little bounce, maybe 4 or 5%. Investors liked seeing that potential for broader AI adoption.
Okay, so strong fundamental points. The nuclear deal, the Accenture boost, paints a pretty good picture. But, and this is where it gets interesting, our sources also flag some challenges. Let's start with the Russell 1000 index inclusion. Sounds good, but it caused a dip.
Yeah, it's a bit counterintuitive. On June 27th, PLTR joined the Russell 1000. That's the index of the top 1,000 U.S. companies. Usually good news, right?
Right, so why the drop? Like 9.4% intraday.
It boils down to index rebalancing. So funds that track smaller companies or have rules about only holding smaller caps, they had to sell Palantir once it got too big and moved into the large cap Russell 1000.
So it wasn't about Palantir's performance, it was automatic selling by certain funds because of their rules explains the huge trading volume jump plus 73%.
Exactly. That huge volume spike is the evidence. It was a purely technical adjustment, not a reflection on the business itself, just market mechanics causing some short-term, well, pretty sharp volatility.
Okay, a technical glitch, but
Yeah.
beyond that temporary drop, there's this ongoing debate our sources mentioned about Palantir's valuation. What does that mean for you, the listener? Why the concern?
Right. Valuation is key. Basically, is the stock price justified by the company's actual business? For Palantir, the worry is it's just very, very expensive by standard metrics. Two numbers really stand out. First, the EV/NTM revenue ratio is around 78x. That means its total value is 78 times its expected sales for the next year. That's really high. Many good tech firms trade at a fraction of that.
78 times next year's sales, okay.
And second, the forward PE ratio, price to earnings, is about 246x. So investors are paying $246 for every dollar of profit Palantir is expected to make next year. Again, hugely inflated compared to maybe 30x or 40x for a typical growth company.
Wow, 246x PE. So the market is pricing in like absolutely flawless, massive growth for a long time to come.
That's exactly it. It means Wall Street needs to see continued really significant growth to justify these numbers. Any slip up, any missed target, and that premium could shrink fast. There's very little room for error at these levels.
So wrapping this all up, the big contract wins, the partnership, the technical index wobble, and this really high valuation.
Well, that Russell 1000 dip might have been a short-term blip, maybe an entry point for some. Fundamentally, the nuclear deal and Accenture partnership looks strong for medium to long-term growth. But, and it's a big but, that valuation risk is always there. The stock is priced for perfection.
So for you, it highlights that classic tension. You've got exciting innovation, but a steep price tag. Maybe strategies like fractional buying or dollar cost averaging make sense here. And you absolutely need to watch if those big contracts turn into real revenue and profit growth over time. That's the crucial part.
And it leaves you with a key question, really. When you see amazing potential but a sky-high price, how do you balance that excitement with the risk? Is the promise enough, or is the bar set just too high? Something to think about. Welcome to the Deep Dive. Today, we're taking a close look at Palantir Technologies. ticker PLTR.
Right. A really interesting one. Is it, the future of AI and data, or maybe just a complex bet caught up in a lot of hype?
Exactly. Our mission here is to cut through all that noise, give you the essential insights, and hopefully maybe a few aha moments along the way.
We'll unpack the latest news, definitely look at market performance and what the experts are saying, basically distilling the key info for you, whether you're new to investing or just, well, curious about this company.
Okay, let's dive in. Let's maybe kick things off with Palantir's recent performance, which is pretty jaw-dropping.
Yeah, it really has. Think about July 7th. You had the broader U.S. markets selling off pretty hard because of new tariff worries. The Dow dropped significantly.
Right, I remember that. Down like 422 points.
Exactly. But Palantir, it actually gained about 3.5%. It really bucked that trend.
Wow, so what's behind that strength?
Well, part of it is just its overall performance this year. It's got this impressive, 84% year-to-date gain in 2025. It's leading the S&P 500.
84%.
Yeah. So some investors might see it as maybe a defensive tech play, kind of insulated by those unique government contracts it has.
Interesting.
And it even got added to the swing trader list. That's an indicator, based on technical analysis, suggesting strong short-term upward momentum.
Okay. And beyond just the stock chart, they've had some big strategic wins too, right?
Absolutely. On July 8th, they launched something called Warp Speed for Warships.
Okay.
It's with the Blue Forge Alliance, aimed at making U.S. Navy shipbuilding more efficient. Plus, they announced a federal AI alliance with Accenture Federal Services.
Those sound like, well, huge deals, really cementing their government ties.
They are huge. These defense moves, they really underline Palantir's vital role in national security.
Yeah.
And it helped them land on multiple top performer watch lists.
Like which ones?
Well, key institutional leaderboards like the IBD 50, that's a list of the top 50 growth companies. It shows strong fund inflows, institutional buying, and they have a really high IBD composite rating of 99.
99. Out of what?
Out of 99. It's basically a near-perfect score on their assessment of financial health and stock performance.
Okay, impressive. Now, there was also a kind of surprising piece of news, wasn't there, on July 7th?
Ah, yes. The eVTOL thing. Palantir disclosed a passive stake, about 20%, in this startup called Surf Air Mobility, SRFM.
eVTOL.
Yeah.
That's electric vertical takeoff and landing, right? Like flying taxis.
Sort of, yeah. And this was an equity for service deal. What's really wild is SRFM shares surged something like 150% in just 8 trading days after that.
150%. Wow. Okay, is this Palantir being genius with diversification, or is it maybe a bit of a distraction?
That's the question, isn't it? You could see it as Palantir strategically embedding itself in these, emerging high-growth industries, proving its platform works beyond just government clients.
So showing versatility.
Exactly. It implies they're not just selling software licenses, they're trying to shape new ecosystems. It's definitely a calculated risk, but it signals Palantir's ambition.
Okay, so the story sounds great, lots of positive momentum. But let's talk about the price tag, the valuation.
Right. Always the crucial part. So, on July 10th, Wedbush Securities reiterated their outperform rating. They even boosted their price target from $140 to $160.
Citing confidence in the AI strategy, I assume.
Precisely. Strong confidence there. That's definitely a bullish signal from a respected analyst firm.
Okay, but isn't the overall analyst picture a bit different?
Yes. That's where it gets tricky. The consensus analyst price target, so the average target from all analysts covering it, sits around $89.32.
$89. But the stock is trading much higher near its all-time highs, right?
Exactly. That consensus target implies about a 35% downside from current levels. That disconnect is, well, it's key here.
A 35% downside according to the average analyst. And then there are the valuation metrics themselves.
Oh, yeah. They get even wilder. MarketBeat recently highlighted the challenge of justifying a forward price-to-earnings ratio of over 400 times.
400.
400. It means investors are paying 400 times the expected future earnings per share. For context, that's incredibly high for almost any company. It signals just massive growth expectations baked in.
But they are forecasting growth, right? I think I saw something about breaking $1 billion in revenue.
They are. The forecast is for Palantir to break the $1 billion quarterly revenue mark, but not until late 2025.
So this whole contrast, it really highlights the core debate, doesn't it? Huge potential versus a really premium valuation today.
It's a classic battleground. You've got traditional valuation metrics screaming caution versus this strong belief in Palantir's platform mode.
Platform mode.
The idea that once a company or a government agency starts using Palantir's platform, it becomes so embedded, so indispensable that the revenue is really sticky. And maybe that justifies the premium. But yeah, growth expectations are just sky high.
So, thinking about all this, what are the main red flags? What should you, our listener, be watching out for in terms of risks?
Okay, well, first, there's just broader market risk, right? We saw how trade tensions hit the Dow. Palantir isn't immune to economic shifts or policy volatility.
Makes sense. What else?
Second, that heavy reliance on government spending, it's been a strength. But any contract delays or shifts in government priorities could really hamper their outlook. Their commercial business is growing, but it's not yet large enough to, fully offset a potential government slowdown.
Right. And what about that adventurous stake in Surf Air Mobility, the eVTOL company?
Yeah, I mean, while it offers that strategic optionality we talked about, SRFM itself is still a high-risk microcap startup.
Meaning very small, very speculative.
Exactly. Its success totally depends on its own execution, getting its tech right, and crucially, getting regulatory approvals, like from the FAA. It's far from a sure thing.
Okay. So pulling it all together then, what's the bottom line here for your understanding of Palantir?
Well, look, in the short term, PLTR clearly has some strong bullish catalysts behind it, but it's definitely facing volatility from these macro headwinds.
And medium term?
Medium term, you really want to watch for concrete progress towards that $1 billion quarterly revenue target. And of course, continued big contract wins, both government and commercial.
And long term, I guess it's about whether the big vision pays off.
Pretty much. If that growth truly sustains, if these strategic bets like the eVTOL thing eventually pay off, then maybe, just maybe, the current premium valuation could be justified down the road. But it's a high-stakes game.
So failure is a real risk, too.
Oh, absolutely. Any failure to deliver on those huge revenue expectations or any significant execution stumbles could trigger a sharp downside correction. It's definitely a stock that demands constant attention from investors.
So maybe a provocative thought to leave you with. Palantir really asks you to invest not just in what it is today, but in a grand vision of what it could become. The question is, how much are you willing to pay for that future potential, especially when the price tag is already so incredibly high?
Okay, let's unpack this. We're talking about Palantir Technologies, a company that's been kind of quietly powerful for a while, but has just, exploded into headlines recently.
Doubling in price just this year.
Exactly. Doubled. But the big question isn't just how it happened. It's where does it go from here? Especially when you hear some pretty serious warnings about its price tag.
Right. Is it the real deal, the future of AI, or, is it a bit of a bubble?
That's what we're digging into today, trying to separate the hype from the actual data for you.
Yeah, our mission here is to cut through that noise, look at what's pushing it up, the real optimism, but also really examine those cautious voices, the ones raising eyebrows about the valuation, give you the full picture quickly.
As of Friday, July 25th, it was hovering around, $154.86?
Yeah, somewhere around there. Saw a high of $155.59 recently. It's definitely active.
No kidding. So what's really fueled this incredible climb? What's the story?
Well, it's the sheer speed of it, really. The growth in 2025 has been, frankly, explosive. Not just a little gain, like you said, roughly doubled this year alone.
Doubled.
Yeah. And if you look at other AI stocks, Palantir is right up there among the top performers, really standing out, and it's holding pretty steady near that $155 mark.
So that kind of growth, it can't just be buzz, can it? There has to be something fundamental underneath. What's the engine here?
That's the key question. And no, it's not just hype. The core driver is real solid demand for their data analytics and, crucially, their AI solutions, specifically their AI platform, AIP.
AIP, okay.
Yeah, and it's not just some generic tool. It's this customizable system that lets users, even non-data scientists, pull together complex data, build AI models, and actually use them in their daily decisions. Think national security, complex supply chains.
Okay, so really practical, high-stakes stuff, not just theory.
Their Q1 operating margin, for instance, climbed to 36%.
36, wow, that's up from 29%, you said.
Exactly, and 36% is, it's very healthy for a software company, shows real efficiency, real leverage as they scale. It's not just about bringing in money, it's about keeping a good chunk of it.
Okay, that's a strong sign. What about the actual revenue growth? Where's that coming from?
That's equally compelling, government revenue, up about 45% year over year.
Okay, strong.
But listen to this, commercial revenue, up around 71% year over year.
71%, wow.
Yeah, that really shows businesses are jumping in, seeing the value, adopting it fast. That's huge for their strategy of expanding beyond government work.
Those are serious numbers, especially that commercial jump. Big institutions are making moves too, right? That signals something deeper.
It really does. It's a kind of validation. A good example is the Ohio Public Employees Retirement System. A big pension fund, usually pretty careful.
Right, not just a hedge fund chasing trends.
Exactly. They recently added over 171,000 shares. That bumped their total stake to over 900,000 shares. When that kind of big long-term money moves in, it suggests they've done their homework and see real sustainable potential, not just short-term hype.
What's the cautious take here?
And that's the flip side, the crucial question. When does amazing growth become, well, overheated? Some analysts are definitely warning that PLTR is now, quote, extremely crowded.
Crowded, okay.
Yeah. JP Morgan, for instance, put Palantir in what they call the high-risk PARC group. That's Palantir, Coinbase, those kinds of volatile momentum stocks. They're warning about potential momentum burnout.
Momentum burnout. Sounds like the steam running out.
Pretty much. The idea is the stock shot up so fast on excitement, maybe everyone who wants to buy has bought, so there aren't many new buyers left to push it higher. And it could fall just as fast if sentiment shifts even slightly.
Okay, crowded and burnout. Those are serious warnings for anyone invested or thinking about it. Means it could be vulnerable. So is that the general feeling among analysts, or is it split?
It is definitely split. Very much a mixed bag, which makes it tricky, right? On the one hand, you've got optimists like Piper Sandler. They recently upgraded PLTR to overweight, set a price target of $170.
So they see more upside, about 10% more. That's one side. But what about the overall picture, the consensus view?
And that's where it gets really interesting and, frankly, a bit worrying for current holders. While Piper Sandler is bullish, the broader consensus among analysts is actually just a hold.
Just a hold, not a buy.
Right. And even more telling, the median price target from all these analysts is way lower, around $110.
110. But it's trading near $155 now.
Exactly. That implies, potential downside of roughly 29% if the stock were to pull back to that median analyst view. It really highlights the tension. Are the bulls right about the future, or has the market just gotten way ahead of itself?
Wow, $170 target versus $110 median. That's a huge gap.
Classic high-growth scenario. Big potential gains, but also big potential risks. Are you betting on the tech or the market's current love for the tech?
And that's such a crucial point for you,